Morning all. How are we all doing? What's time? Oh, a little bit late. How are we doing? Morning, Ladder. Morning, David. I made it to one of your live streams again. I'd rather be here than in bed with the old lady. I'm not sure how to take that one. Compliment or not? Depends what the old lady looks like. Right, let's have a quick scan of the news before the market opens. Just watching oil. Got out of an oil yesterday. Took that aggressive position I said about yesterday and got out of that one this morning. I posted it in the Telegram group. Reason I got out was obviously at the moment with oil, we're in this downtrend at the moment. Let's draw one of those lines on that everybody loves. So we're obviously in a downtrend at the moment. So if this is going to continue, in theory, this is where we're coming back down from. Personally, I think this is likely to be the break after what OPEC said yesterday. So I got out of it just in case, but we are starting to move up again this morning. So we'll see what happens. We'll have to wait. Big important day for oil today. So so I'm just waiting to see what happens with the DAX this morning. This is the funded account and up to 700 on it now. After yesterday's trades. So the market opens in 5 minutes. So we'll do a quick rundown of the news first. So I'm not with it this morning. I'm just got so much going on with so many different MT4s. I'm just trying to figure out which one to click on. Right, so yesterday, OPEC. Big movement on oil yesterday. That was off the back of OPEC. So they came out yesterday and said they are seriously considering a new cut, basically to boost the oil price, really. So the more production cuts they put in place, obviously, the less production is available, the barrel counts then start to drop and the price of oil starts to rise. So they haven't said anything more about it just at the next meeting. So they're just trying to, lots of hawkish comments, just trying to boost the price of oil, and it worked a treat yesterday, which was good. So we got some decent movement to the upside on oil. If you look at it on the daily, we had that rejection. So when we previously came down, we tapped here, and this is where we thought, yeah, this looks like it's going to be the leg start. And then we had this move back down again. And now we've come back down and we've completely taken out anybody that longed that area. And we have had a lovely big bull day. So again, 3-bar reversal, push down, rejection or pause, push. So this is a lovely 3-bar reversal move. Similar to that one there. And looking basically for this to start next leg. But we've had this before, haven't we? And then we collapse back down again. So it's not necessarily going to happen, but it is the precursor to what tends to start a new reversal move. So we'll see what happens. Looking for a good update today, basically, to bolster that. So if today finishes similar to what we have at the moment or higher, that's a 3-bar reversal put in, then tomorrow is the big day. So, but it's good news. It should be bullish moving forward with oil. Morning, Diamond. We had Williams speaking yesterday. Lots of hawkish comments came out of Williams yesterday. Inflation expected to fall 5 to 5.5 by the end of 2022 and 3 to 3.5 by late 2023. So although they are expecting inflation to fall, obviously that is just speculative. Employment rates are expected to rise. They're going to continue raising interest rates until 2023. So this is the real one that made the markets come down yesterday. Basically confirmation of the next rate increase. So they're definitely going to be increasing rates again. FOMC may be more aggressive, i.e. we might have slightly larger than expected interest rates. So there's lots and lots of bullish talk coming out. Whether the market today and moving forward will continue to rally into the rate increase, we will have to wait and see, but it certainly seems that way. So it looks like we might be starting to get that that push in the US dollar off the back of those comments yesterday. We had nothing much else. Japanese jobs and stuff, but there's nothing much else in there really that's important at the moment. So market's just opened, or just about to open. 7:58. What's the line? What? Sorry. Why are my candles closing on? What the hell? Look at these candles. Right? I've never noticed this before. I don't remember this being like this before. These candles close. This candle closes 9. This is the 9:57 candle. This is the 9:52 candle. The 9:47 candle. Candles don't close at different minutes. What? Sorry, one second. I just need to figure out what the hell's going on. Yeah, look, 10 o'clock candle on the S&P. The DAX, for some reason, their candle closes out by 3 minutes. Has anybody else got that on? Has anybody got a my Forex funds account? Morning, Themba. Just wondering if your candles are the same as mine. That's weird. Is that going to throw the EA out? The EA does calculations on time. That would explain why the DAX didn't trigger at the right time. Okay, that's weird. So this is a 10:02 candle. The EA is revolving around trading at 10:05 and 10:15. That's not going to work, is it? I've never seen that before. Yesterday's candles, look, it's only today. Look, yesterday's candles were all on the 5 minute. 23:45, 23:50, 23:55. Today, for some reason, their candles opened, the first time candle opened at 2 minutes past, 7 minutes past, 12 minutes past. Okay, never seen that before. That's not going to, the EA is not going to work on that. I've never ever seen a broker open a candle, a 5 minute candle at 17 and 22 and 27. That's ridiculous. You see the same thing, Diamond. Hadn't noticed it before. No, this is this. I went through the other day. I think it was on Friday, wasn't it? Where the EA put the opening range in the wrong place. I now know why. I wasn't paying attention. But look, 7:07, 9:47. It should be 05. It's 5 minute candles. So that's just opened a new candle there. We're not. Wonder why that is. Well, that answers the question as to why that fired at the wrong time then. What day was that? That was Friday. Sorry, I just need to do this while I'm hot on the case. This is some weird data issue, isn't it? Right, well, this is, I'm going to have to manually adjust these orders, I think. I just need to watch this. So we should be firing the first order in 2 minutes. So if you're new in here, I've got an EA running that I'm testing, and it works on 5-minute intervals. So the fact that we are out by 3 minutes is going to make a difference. NASDAQ and all the other indices are the same. FX is all okay as well. It's just the DAX for some reason. Okay. I'll just quickly cover the news as well while I'll wait for that to get to the right time. We've got the CPI for Germany this morning as well. Well, I say today it's down as an all-day event for some reason. I don't know why. Whether they just haven't really got a time that it's going to be released. But there is CPI figures coming out, which are going to affect the euro today potentially. We've got CAD GDP this afternoon, and then we've got Bailey, and we've got consumer confidence for the US at 3, half an hour after the market opened. So news today for CAD, pound, and US all red. So you should have some decent movement coming up this afternoon. Yesterday's candles all look okay. It just started with today, yeah. I'm wondering if the other day, it must be the other day when it fired with the wrong levels, because it was working on the 1 minute time frame, picking the highs and the lows, and obviously it wouldn't have picked the right highs and lows because the time was wrong. So I don't think it's going to draw the right highs and lows in here, although I have changed the code since then. So there you go. There's the opening range high and low in. Hasn't fired the orders because we're not. Has it not fired the orders then this morning? That's not going to be able to fire because we haven't got there yet, have we? As far as this is concerned, it hasn't actually got to the time yet, although the opening range. Oh my God, this is a head screw, isn't it? Right, so it's drawn the opening range high and low incorrectly, but the candles are painting wrong. This is impossible. Morning, Stevie. We're having mathematical confusion this morning. I just want to see what this does. At 8:07, in theory, this should fire the order at 8:07, not 8:05, which isn't actually going to be too much of a problem because although the candle's painted wrong, that is the 5 minutes. It's just that the candles are out. See, look, there's the opening range candles. See, look at the difference between that candle there, one full 5-minute candle, and then what they're painting is just totally wrong. If you're trading price action candlestick patterns on a 5-minute or chart or any chart, this is going to really screw everything up, isn't it? So this isn't going to fire an order, is it? I might have to do this manually this morning. 468. Sorry, bear with me a sec. Oh, the joys of funded accounts. 1%. I'm just going to manually adjust these orders just to put them in the market manually. Oh, pain in the ass. I'm gonna have to check out with my Forex funds what's going on with this feed. I'll have a chat with their support. After the stream and see if I can figure out what the hell's going on, because that's not right at all. And why is it just the DAX? It's like the DAX opened a few minutes late this morning. Anyway. Morning, Forex. He's back again. Okay, so opening range this morning, pretty wide. I've got to work out I've got to work out the 10-minute, haven't I, manually? So the 10-minute is going to be the same as the 5-minute at the moment because we're inside bars. So it's only the 15-minute I'll have to fire manually. That's fine. I'll come back to that in a minute. I like to come randomly. So yesterday I had found another problem with the EA yesterday during the New York session. It didn't fire the first order because price was too close and the spread was too wide. So if you look at yesterday, this one here, it failed to fire the first order on the NASDAQ because it had an invalid stop loss and take profit. So basically, if you have the candle, let's say that's the opening range, if this candle basically if the opening range candle basically closes very close to the end of the candle like that, the spread means that when it tries to place the pending order is actually not able to be placed because it takes it outside of that range and it's trying to place an order anyway. So I've got to come up with an algorithm basically to, on the next candle after the opening range, if it didn't manage to get the pending order in and it's pulled back, place the pending order. If the spread is, I just got to do some calculations basically to wait for it to pull back to put the pending on. So there's another issue there, which is what live testing is all about, is finding these issues, because in the back tester, it's just not going to have this sort of thing. Invalid stop loss and take profit isn't going to happen in the tester. So you have to figure out these things live. So that's not a major issue, but it's something I've got to work on as well. But we'll see. Right. So waiting for an opening range breakout there on the DAX. We're just inside bars at the moment. DAX has gapped up this morning. Probably easier to look at on the Robo account. So we have got a gap up. Quite a big one this morning, which it seems to be trying to fill at the moment. So opening range break to the downside, I suspect, will be what we're going to start with and maybe get this gap fill done. So the DAX this morning, ADR on Euro odd. So the DAX yesterday rather was quite big. Quite big down day, obviously, which was great because we're looking for that rollover to start the next leg down. That's a really big move yesterday from a down day perspective. So it's good to know that we've got some bears actually coming on. We had a good, decent movement on US dollar. Obviously, we had a big bull day on the US dollar, so that's helped the indices come down. So first down day there, NASDAQ down day. A lot of Tesla stock sold off again. Elon Musk's dumping all of his Tesla stock because he needs to pay for Twitter. But Tesla's dumping quite a lot, which is obviously means the NAS is going to be coming down quite a bit faster. Whether or not that sell-off's finished now, I don't know. So there's the first 3 candles in, although it's not really 15 minutes, is it? We've got another 3 minutes to go yet. That's weird. I've never, ever seen that on a broker before. 5-minute candles being out. That's just bizarre. Anyway. S&P, same thing, turnover. So again, with the S&P, if we're looking for this bear run to continue, you can see why it's doing what it's doing. You know, it's just, this is the peak. We're very, very orderly at the moment. So just looking for next leg down to start. We're in a bear market. We're in a recession. Everything's going wrong. There's absolutely no reason why we shouldn't get a next leg. So fingers crossed, we'll get that movement coming. Why is that not firing at all, the EA? Something wrong there. I don't know what it is. It's not even attempted to fire an order off this morning. Weird. Anyway, I'll think about that later. I can't even think why it's not firing. It's just not firing. I've got a feeling it's because it's not able to do calculations correctly because the time candles are all out. I've never seen that. 14 years, 15 years trading, I've never seen a broker close candles on a 5-minute candle, not on a 5-minute. I just can't even get my head around how that could possibly happen. But anyway, so this is actually the 15-minute candle painting here, which closes in, I think, 30 seconds. I can't work this out. This is a real brain fry this morning, sorry, as you can probably tell. What about the history center? I'm not downloading history. Yeah, no, there's nothing wrong with the platform. The platform's fine. It's not my terminal. Jarman's got the same problem. It's my Forex Factory feed, and my Forex Factory, my Forex Funds feed. It's their data feed. There's nothing wrong with the DAX. You know, the DAX candles are correct. This is the 10-minute candle. It's all fine, but it's on their platform, their brokerage. So I need another pending order under there, which will be 519. Firing that now. Oh, sell stop last. What did I just do there? Press the wrong button. Should have pressed sell stop. Okay, I'm 10. Oh my God, right. This is a cock up and a half this morning, isn't it? I'm going to add another order under there. Okay, so I'm short on the DAX. I shouldn't be because we haven't got a break yet. So if this fails this order, this isn't part of the plan. Oh my God, what a cock up this morning. Euro New Zealand. So we've got lots of movement on the Euros or the Aussie New Zealand pairs at the moment. We'll have a look at those in a sec. I'm just going to let that play out because the EA is not firing on it. So, right. Sorry, this is a right cock up this morning. Just forget everything that's happened this morning. It's all broken because my Forex Factory are dumb as hell. Anyway, go over the pairs shortly. Does anyone else see a gap fill on Aussie US? Gap fill on Aussie US. Yeah, you've got a big gap there. Got 25 pips yet. Actually, a bit more than that. Yeah, no, 25 pips. It's up at ADR already. So this looks like strong Aussie. Yeah, strong Aussie and strong New Zealand this morning. Oops. So very strong movement on the Aussie and all the Australasian pairs, Aussie and New Zealand. I'm only going in with 0.25% as well. What am I doing this morning? This should be 0.5% entries. This is why EAs are so good. Trying to trade manually is really hard, isn't it? This is really throwing me to my. I can't get my head out around how you could possibly have a 5-minute candle not ending on a 5-minute. That's just, I don't get it. And if that is the case, why is it only on the DAX? Why is it not happening on any other instrument? Everything else is closing on the 5-minute. Anyway, so yeah, we'll see what happens with that this morning. can either work or it won't. Right, ADRs. Let's talk about normal stuff. Aussie dollar Swiss. Actually finally managed to reach my own set payout goal on my Forex funds for the second time. Only 5%, but I'm already happy. I did not blow it. Well done. Good job. Good one. There was a news last night from Apex, by the way. Anybody that is funded with Apex or has been funded with Apex. I've been funded with Apex. I'm not with them anymore because of the payouts. They take, you can't draw more than 1,000. Well, you can't draw more than somewhere between $1,000 to $3,000 out, depending on your account size for the first 3 months. They've changed all their rules. They've made their rules a little bit looser. It's only a 7-day evaluation now. You can draw out twice a month now, but they haven't changed that maximum cap. So you cannot actually draw anything substantial out of your funded account with Apex until 4 months, which 99.99999 recurring percent of people blow it within 4 months. So basically they never pay you. So I got all excited this morning. I was like, Apex, oh, they've done it. So I've got 2 payouts now. We can only have to wait 10 days instead of 30 days to get paid, but they haven't increased the cap. So if you get funded with Apex with a 250 grand account and you make 250 grand in 4 months, you can't actually draw it until month 4. If you can survive that long, you'll only actually be able to take out about 3-6 grand. So forget Apex, they're rubbish. Not trading with them anymore. Aussie dollar Swiss marching higher. Big movements. CAD Swiss marching. There's a lot of movement going on this morning. These ADRs all over the place. So Aussie Swiss just coming up into resistance at ADR. If we get up to there and get some kind of reaction, that's probably a nice mean reversion trade today. Aussie dollar yen, again pushing up. Looking for shorts on everything against the yen at the moment. So we've got a bit of a gap fill there, potentially, to come and do at 200% ADR as well. So that's a nice looking short entry. Unlikely we're going to get all the way up there today, but you never know. Aussie US, again marching. So something's going on with the Aussie. Spanish CPI is out. Swiss GDP. I'm not quite sure why the Aussie's rallying this morning. There's no real news that I can see based on that, but we are getting big rallies on that. Pound Swiss is on a mission. Yes, there's a lot of Swiss franc going on at the moment. We'll have a look through all of these in a sec. John, the first time I hit 10% 2 months in a row, I said to myself, that's it, I'm a real trader now. And that was, in fact, the last time that happened. Yeah. I'll bring your attention back to my PDF. That is not an abnormal phenomenon. That is totally normal. No, that's the wrong one. On there. That's a totally normal phenomenon called walking on water. Step 4. Go and download this if you haven't got it. But that's good though, because you've identified, you're on step 4 of becoming consistently profitable. Walking on water. And that's where you get overconfident and it starts to go a little wrong, but then it goes right again, which is good. But yeah, 10%, but that's part of the game, isn't it? You're never going to get a consistent 10% amount. It doesn't work that way. You have massive months, you have losing months, you have mediocre months. Just doesn't work that way. The market doesn't allow you to extract a salary as a trader. You take what the market gives you when the market gives it to you. You don't have a choice in what you take. So yeah, Aussie US pushing hard. We had strong US dollar obviously yesterday. I think we're going to get continuation strength in the US. So this Aussie US push, likely looking to come up and try and get the gap fill. Nice looking short opportunity there as well. CAD Swiss pushing hard. Again, Swiss franc very, very weak this morning. So we've got a very strong Australian dollar, very weak Swiss franc. So that one's pushing up into ADR. Again, we've got resistance coming up at just over 125 there. So if we get up to there, potential reversal alert up in that area on M5. So obviously with all of these, the trouble with some of these is obviously the reversal alert isn't going to come unless we get some kind of accumulation. You're not going to get the reversal alert until all the way down there. So with some of these, you might have to just watch these for price action and maybe take a bearish engulfing or a shooting star or something up at the highs. But got some good levels coming up. Yeah, so somewhere around 125 ADR today could be a very good CAD Swiss short. Euro odd, again, big drop there. Australian dollar, very, very, very strong. Euro New Zealand's come down on the strong New Zealand dollar and New Zealand dollar Swiss. So not quite sure what is driving these Australasian pairs this morning. It might be something to do with China news, where China's looking to take more Russian oil, basically, or energy cooperation, oil, gas, etc., etc. So that might be bolstering that area. I'm not quite sure why the New Zealand and the Aussie would take off together on that news. So interesting. But yeah, good ADRs opportunities this morning on these. Again, wait for some bearish price action to come in, and if you can, reversal alert. So to get the reversal alert rectangle there to jump up, sort of up to here, we need a bear candle to go in, and then we need a new high. Then you'll get your reversal alert higher up and tighter. But it's whether or not that actually happens. These things are on an absolute mission at the moment during London, so we'll see what happens. But yeah, lots of opportunities there. So Aussie dollar, at the moment, obviously Aussie dollar has been very, very, very weak, as we know. So all the Aussie pairs have been coming down quite dramatically. So they are all due a pullback, basically, some kind of pullback profit take move. If you look at the previous movement we've had against the Swiss, we've had a strong Swiss franc. We've got a weak Swiss franc at the moment, and we've got a strong Australian dollar together. So these are pushing very hard. Obviously at the moment, because you've got one pushing and one pulling. But all these Aussie pairs are all due, a good, obviously we've had a weak US dollar, so this one's already done the move, but they're all due a push. So any ADR reversals you get, you want to be a bit careful because they might not come down too far. We might have a lot of bulls sitting there trying to jump on this rally. So we might not get too much of a move to the downside, but 125 on New Zealand dollar Swiss. So, but they're all moving very, very, very fast and very hard. So look at where we're headed. Look for liquidity runs above previous day's highs. And if you get bearish price action there, that's where I'd be looking to get in and obviously play back down into these propulsion gaps. So one of two things is going to happen when you get these ADR moves. They are either the start of a continuation move, or they are just reaching for liquidity to carry on in the direction they're going. You never know which it's going to be, but that's why with the ADRs, they're a scalp move. So you take them, you get out around about a quarter of an ADR. It doesn't matter, does it? If it's pulling back and it's going to continue, you've made money. If it slams down, you get out with money, but obviously it will go a lot further. But we're not worried about that. We're worried about the trade. The trade idea is that we're going to get a pullback from an ADR extension. So lots of opportunities there for ADRs this morning. Aussie dollar CAD. Yeah, so Aussie dollar CAD's already come off of yesterday's high. So we're just taking yesterday's high out. Quite surprised they didn't go any higher with that. So that's last week's high. You got that level. I mean, that really, that's where all the liquidity's sitting. For everybody that's entered short, liquidity sitting at one of those two levels. I'm quite surprised they just took yesterday's high out. But This one, obviously, we've had a strong US, which will typically bolster the Canadian dollar as well. So I would expect if we're going to get, and this is the if we're going to get continuation strength on the US dollar today, we might not see it until this afternoon, obviously, because we've got news coming out. But if we're going to get that continuation US strength, we should see Aussie dollar CAD coming down. So this might well just be a reach for liquidity. I'd be very surprised if they just took that. That doesn't make sense. You're going to have so much more money sitting there than you are there. You've got 3 days worth of money sitting above that high there. I don't think that moves over. I think you're going to get an ADR hit on that. But then short. So long term, this is, I think, temporary strength. Don't forget, obviously, we had OPEC news yesterday as well with the Canadian dollar. So if they're going to bolster, put caps on oil production, Canada are going to start selling their oil at a more expensive. That's going to bolster the CAD. So there's lots of positives I see for CAD at the moment, for strength, and obviously less for us Australians. So I think down long term. So hit to the upside. Looking to take shorts. Aussie dollar CAD. So there's your ADRs, lots of those this morning. We're probably going to get some more hits on those, I would imagine. Don't forget this afternoon, we've got the Canadian GDP. CAD GDP doesn't tend, well, GDP figures in general don't tend to be massive market movers. They're not a leading indicator, they're a reactionary indicator. The GDP is a reaction to monetary policy. So it's not something that necessarily affects monetary policy decisions from the central banks. But it is something that shows as an indicator that things are going the right way or the wrong way. So you tend to get a move quite often with GDP figures in the correct direction. So when you get positive, you do tend to get a positive. When you get a neutral, nothing much happens. When you get a negative, we haven't had negative GDP on the CAD for a long time, since October 21. So yeah, you do tend to get a move in the direction of the news off the back of GDP, but we'll see. You don't often get these being out by very much. There's quite a big miss there, at 1.1 on a forecast of 0.8, but a lot of the time it's usually within 1 or 2 percentile. In fact, that was within 3 percentile, so it wasn't that far out, but it's normally pretty close to forecast because it's only a month-on-month figure. So so we got that this afternoon. I'm interested to see what Bailey says this afternoon as well about the pound. I think we might get quite a bit of volatility off the pound this afternoon. It's his first proper speech in the Lords for a while since the new budget, new fiscal policy came out. So I think he will be laying out today what the central bank's new policy is with interest rates moving forward. So I think we might get a few hints dropped this afternoon. So you want to be a bit careful this afternoon on any pound pairs you've got. I've got no exposure on the pound myself at the minute, but be careful of that this afternoon. New Zealand dollar yen ADR, going off all over the place. Lots of opportunities I see on these. That Aussie dollar CAD. So there you go. So that's the liquidity from Friday gone. I'd be very, very surprised if we don't take out last week's high. Aussie dollar Swiss 150. Again, coming up for these highs. Yeah. You're going to get a reaction here regardless, because there's going to be a load of pending orders sitting there. There's a load of limit orders sitting there to trigger. So you'll see this jumping around up here, eating those orders. So there's just a load of limit orders, sales triggering here. It's whether or not this rally, there's enough buyers in here to take that lot out, push through that level, make everybody that's shorting that with their limit orders puke and get out. And in that case, we might get a push up to sort of 175, 200 ADR if that happens. If not, that's where we would look to take the trade from. You're not going to get a reversal alert because it's just such a strong move. You're not going to get a reversal alert until the move's sort of halfway over. And it's trading 1 minute. Obviously, You can take that one on 1 minute. But this level here, so it hasn't managed to get through there yet. So see if it rejects. You might find it needs another run up to get through there. DAX has gone absolutely nowhere this morning. I've got 2 positions on the DAX. That one shouldn't be on. That one is a proper trigger. That was a fat finger. Just these stops properly as well. Keep your eye on that Aussie Swiss. Aussie yen's gone through. Aussie US, we've got the gap fill at 67,481. So above 125 ADR today. That's a good looking area. I mean, with all of these, if you wanted to, you can just, stick. I'm not going to do it on this account because this is the funded account, but stick a limit order there. Once the gap fill's done, it takes a lot, as you can see, a lot of buying pressure to get up to that level. By the time you get there, the market's run out of buyers. Don't forget, average daily range is the usual order execution range for the banks. So when we get beyond here, they are executing more orders in one direction than normal. So these are exhaustion points. By the time we get there, they've, think of it like a magazine in a gun. Yeah. If you've got 15 rounds in a 9mm and you've fired all 15 by London, you're out. Yeah. So there's very little extra movement you can get. It takes something quite substantial to move beyond ADR. And especially when you start getting to these levels, which is why, these odds of going past these levels decrease substantially, because it's hard to get enough volume to actually move that far, that hard, that fast and that hard. So by the time we get there, that's going to be quite tired. And also by the time we get there, we are going to be getting ready for New York opening, potentially, a bit later on. So if we get up to there and start accumulating, if they're going to power up the US dollar during New York, obviously, that's when you're going to start the move. So, that's the theory behind ADR. There is only a limited amount of money that goes through FX transactions typically in a day. So if you get that gap fill done at 125 ADR, market's going to be exhausted. And that's when you're going to start to find things starting to flag. Okay, so Aussie Swiss just taking out that liquidity. So keep your eyes on this one. See what sort of price action we get up here. Reverse alerts there. Oops. So if this basically starts to look bearish, your reverse alert is going to be somewhere around about 15 to 20 pips with a stop loss. I'm tempted to take this actually. Aussie CAD, it's just taken out that level. ADR's all over the place today. So Aussie CAD and Aussie Swiss, both up at high liquidity levels. So both worth watching for shorts here. Aussie Swiss is obviously much more extended, so that would be my personal choice. Lee, in situations like that, when we know we won't get a market reverse alert, what should we look for if we're interested in taking a trade? So basically, price action. So up at these levels, basically, what happens at these levels, obviously, is one of two things. Well, it's either what normally happens is obviously is a liquidity run. So we know the stops sitting here. Yeah, everybody that shorted this, yeah, put their stop there. Everybody that took that double top, put their stop there, right? They're not in it anymore. They've gone. They've lost. They're out. If they didn't get out down here, they're dead. So what the market's doing is it's running that liquidity, first of all, stopping out those people, gathering their orders. And there's also a load of limit orders sitting there because the market's looking at those levels going, well, we didn't get past there twice. So if we get to that level again, I'm going to sell it with a tight stop, which is why you tend to get M pattern reversals that look like that, because everybody that enters on those limit orders has their stop above, so the market comes and grabs them. So what we're looking for here is just basically something like a shooting star, which is basically the buyers taking all those orders and then stopping buying. Sellers then taking over. So we're pushing up and then the sellers are taking control. Or we're looking for a candle like that, and then the next candle is a bear candle. So a green candle like that. How long will it close? 1 minute. So you see how this candle closes at that level. But then if you get a bear candle next, bearish engulfing, that's basically a sign that the buyers were not able to progress any further. The bears have taken over. At that point, anybody that's longed here will be seeing that and going, yeah, looks like this is the end of the move. They will then start to exit their position for a profit. To exit the position for a profit, if they bought, they need to become a seller. So they need to sell their position to somebody else, which starts more selling price action, which creates that pullback, yeah, or reversal. So either here you get a pullback and a continuation, or you get a reversal. We don't know which it's going to be. But if that move starts, you know, it's a case of probably going to come down somewhere into there. Could come down to there, could come down to there. I don't know. But that's your scalp move down to one of those levels. Don't forget, the market's exhausted. It's taken a hell of a lot of buyers. They've been buying this thing all through Asia. Yeah. Pause. Bought more. London opened. Bought more. Yeah. So the market's been buying this thing now for hours. There's only a certain number of buyers in the market before we run out. So there you go. So we've stopped dead on that level. Now we're looking for a bearish engulfing. So if this candle closes, well, that's a really good drawing, isn't it? Oh, what is going on? My finger will not draw a straight line down. Down. There we go. So if we draw a bearish engulfing now, like that, yeah, that's basically a sign of the buyers have run out of steam, sellers have taken over. Now the problem with this is the banks know this, yeah, and if they want more liquidity, we know now anybody that gets in, when this candle closes, you're going to sell, right? Where are you going to put your stop? There. So what the market will do is once this initial selling has started, they will then take the market higher to grab the liquidity from these guys that's just entered, stop them out, and then put it back down again, which is an uneven M pattern reversal. That's what the market reversal alert indicator is designed to indicate. Push, pull, push, pull. When that changes color, that gives you that M pattern reversal. New Zealand dollar Swiss, the same, right at last week's high. Yeah. So same. You see, we're getting here. We've pushed up. We've run out of steam. We've got a wick forming. Yeah. So, we've pushed. We've got to here. There's a load of limit orders triggered. Now, this doesn't mean the move's over. It means that a load of limit orders have triggered. There's been a lot of selling action here. Does that mean that this bull run is over? No, it just means that we've met a load of sellers. If there's 2 million going long and there's 1 million limit orders, we're going to run it. We're just going to run straight through it like a steam train. Yeah. Just because we've got some bearish price action doesn't mean the move's over. And this is why price action is key. Yeah. It tells you what's going on. We know until you get a red candle showing here, the sellers are not in control of this market. The buyers are in control of this market. There's more chance of things continuing to do what they're doing than there is for those to stop. Yeah. It's the old 80-20 rule. There's 80% chance of a trend continuation. There's 80% chance of a range continuation. There's only a 20% chance of a breakout, which is why breakout trading is so difficult. Pound Swiss. So things like the Pound Swiss, you got a little bit more to go on that one. Again, if it gets extended up to that level, yeah, 125 to 150 ADR. We know we've done a hell of a lot of moves and the market is likely to start to run out of steam. So there's your reversal up there, but you need to wait. And that's why it's advisable to wait for a reversal alert, because the reversal alert is a confirmation that this is the last batch of sell orders that went in, that down candle. Yeah. As you push up and take that liquidity, this is kind of where you would expect the continuation to go from, because the sellers try to take control here. This is why we got a down candle. This is the whole point, the whole mechanics of the indicator is you get a down candle and then a move higher. So what this is signifying is this is an area where the buyers started to lose control. The sellers tried to take control, but they didn't quite have enough power there, not enough follow through to carry on with the move. If we then push back down and the same thing happens, that's fine. We know that the buyers are still in control. When you break that level, the sellers that wanted to get in there are going to take control of the market. And that's why you see the reversal alert happen. And then as the buyers try to take control again, the sellers here go, nah, we're in control. And they take it back down, which is why you get your retest. Yes, that's what market structure is. That's what forms market structure. You see it down here in this one. Look, this is not a good example because this is like the crossover of the day, but market sells off. You get a long wick, another long wick, lots of long wicks. So this is basically sellers pushing down, buyers rejecting, sellers pushing down, buyers rejecting, sellers pushing down, buyers rejecting. They push up, the buyers start to take control. The sellers try to have another crack. The buyers go, no, we're in charge. Retest. There's your, this isn't a particularly good example because of the time of day, but yeah. And that's what we're looking for when we're trading mean reversion and trading reversals. So, there's no, for me here right now, there's no convincing price action. We're on an inside bar. So that last bar that pushed up and rejected those highs, we're an inside bar. So we put a bear candle in, but look at the wick. There's a lot of buying in there. We're an inside bar. We haven't managed to break that high or that low. So a lot of people now will have a pending order sitting under there, ready to get in, and then take a second entry when you get the reversal there. All sorts of ways to trade it, but that's what's going on under the hood. Aussie CAD, see, slam straight through it. Yeah, there's absolutely no reason for you to enter a trade on this. Yes, it's a really good level, and this is why limit orders are dangerous. Yeah, limit orders, they work really well. When they work, you are getting the best possible entry you can get on a trade with the tightest possible stop. But you will also get run over 80% of the time. But when you get them, there's a massive reward. But, limit order trading is a lot of what the banks do. Yeah. 10 pip stop, 200 pip reward. That's where you get your 10, 21 to 1 rewards trades from. But you're going to get, 1 or 2 out of 10 of them actually work. but when they work, the reward is absolutely vast, isn't it? But yeah, let's run over. So again, 100% ADR. So look at where it's going. I would say we're probably headed up there now, aren't we? Got all that rejection there. We've got a little wick there, but I would say that's probably now going to do something like that. But see, it might come down, and this, this is what you want to watch. So this goes onto your watch list. I've got a monitor. I don't trade like this anymore, but because I've got the dashboards, it alerts me when stuff's going on. But yeah, if you had a watch list, if you like, a monitor with a watch list on it, you'd have that stuck on your watch list now. And basically, you're just looking for a bear candle, aren't you? Yeah, we know this is a high liquidity area. The stops in this area here, we don't know how far and how deep the stops go. And this is the market trying to find all the stops. Yeah, it's going to keep buying with tons and tons of orders until all these sellers, all these stops are triggered. When it's buying and it's got no more liquidity it can grab, we get a big bear candle. And then everyone jumps on. And then we're off. Aussie dollar Swiss. Monthly range is 60 pips higher on the New Zealand dollar Swiss. Okay, so there's prime example. Whoa, wrong way. Yeah, so there's liquidity. Liquidity's run. This candle here this is a 3-bar reversal. Yeah, push, pause, pull. Push, equilibrium, sellers taking control. Bang. And this is caused by all the limit orders that were sitting here triggering. So the buyers are just going, it's like millions and millions and millions of orders, millions of orders, millions of orders, way more millions of orders. Oh, hang on, we can't get any further. Try again. No, we can't get any further. Again, inside bar, reversal. Yeah. If this is going to work, we could well see something like that. But it may well just do that. Again, order under the low, get gathered in when it starts, add. Don't forget we're 125 ADR, so it's exhausted. Swiss yen's just hit as well. Although I want to be taking shorts against the yen, so. Solid 1 hour up without a stop, yeah. They like to hit the monthly range quota. Always see good reversals around 150 average monthly range, especially if they hit them early in the month. Yeah, so that's why I put these on there. These are good. These are obviously swing traders. This is for your long term. When you're hitting the 150s and above, we know we've got a big, strong move in, and your RSIs will have triggered obviously around these levels anyway. But yeah, monthlies are good. No weeklies this week yet. On Tuesday, it's only Tuesdays, but yeah. But watch those. RSIs are dead and flat. Obviously, we had a lot of unwinding yesterday. So anything you got in on the hourly RSIs yesterday, we had quite a lot let up there. All got reversed yesterday on Williams' speech. So when Williams started talking, a lot of the squeezes started to unsqueeze. Oil, indices, US dollar, we had a lot of movement. So obviously the RSIs were all unraveled. Pound New Zealand's the only thing we've got actually at the moment on the hourly to look at. So that's extended to the downside. Awful looking chart, this choppy mess, absolute choppy mess. It's just nowhere to trade this. It's just not tradable. Somewhere around there, I'd be interested, maybe somewhere, if we got up to there, maybe around there, but I want to be shorting it. This thing's an absolute nightmare. This is the one with the complete, well, it was yesterday, wasn't it? When we looked at this yesterday, the moving averages were basically railroad tracks that are totally flat, but this thing is just not going anywhere. It's not tradable, really. But saying it's not tradable, it's totally tradable in both directions, isn't it? Because it's in a range. So unfortunately, though, this is not where you want to be trading from the middle of a range. You want to be trading at range extremes if you're range trading, don't you? So not really any use. DAX starting to come down. So we haven't broken out of the 5-minute range yet with any aplomb. It's a good word, isn't it? Aplomb. I don't even know what it means. It's making stuff up. Just watch those ADRs. So looking to add to the DAX. So I've got these 2 positions on. I should really only have that one on. I am only running with half normal risk as well. So I don't really mind having that one on. In fact, I should really adjust that to a full risk trade, shouldn't I? So be 533. Oh, I'll just take another short. There we go. I'll just sell it again. There we go. That's full risk on now. Short. Okay, so just taking that liquidity. And we'll see if we get some buying pressure coming through. That looks like something's just happened. No, it's price action. Yeah. So I was just thinking out loud. The EA is the way that I've programmed the EA is to work on 5-minute candle closes. I'm just trying to figure out. I'm just trying to think off the top of my head why this hasn't triggered any trades this morning. And the way that I've coded it is on the close of the 5-minute candle on the M5 time frame, it takes a high and a low, but it also triggers trades at a particular time, in this case 10:05, but at 10:05 it didn't have a 5-minute candle close, so it can't have picked the levels. I should have had the comments up. I've got a comments section which shows me what it's logging as highs and lows and everything, and that's all turned off at the moment. It's got to be to do with this candle time. Very, very, very annoying. Anyway, it's not a problem for me. It's a problem for me. Right. Let's have a quick look at these Aussies. Okay, so inside bar's broken. There. So buyers tried to push up. Sellers took control. Buyers are trying to push up again. So if we're going to get that M pattern reversal, one of 2 things is going to happen. You're either going to get a liquidity run above that high again, or you're going to get the sellers actually remaining in control and not letting the buyers take their stops, which is that M pattern. So there's 2 M pattern reversals where the second peak is lower, or where the second peak is higher, which is a stop run M pattern. Both reversal patterns. And obviously the reversal of that here would be triggered if we get the lower peak. If we get a higher peak, i.e. this pushes up there, then the reversal rectangle goes there, and we get the latter, which is the higher peak reversal. But it does the same, indicates both, basically. It doesn't matter which it is. Let's have a quick look at oil as well this morning. Oil's. So yesterday we had that lovely run off of OPEC. I was very close to taking my position off there. I had a chance to get out this morning at break even. I didn't do it. Remind me of that if this comes down. I am being brave because oil keeps killing me, but I'm being brave this morning. So looking for this basically to be the peak formation low. What OPEC said should be bullish, and if we can get a break above ADR today, I think we should definitely come up and challenge that $82, $83 a barrel level. So I'm hoping today we get a bull run and we take out the Asian high and the high from Friday. So I'm waiting to see what happens with this. So the position that I took off this morning was there. So that was my aggressive entry yesterday on the 15. It's actually on M15 reversal, I think it was. Yeah. So I took that entry there. So basically, as we pushed down yesterday, I put my buy limit in there and I was waiting for that to trigger. So I took that one off and I used that one to get rid of this one, which was a 0.2. And I moved that 0.15 down to a 0.1. So I took a little bit of loss off that. I took that loss off of there and banked 2% on the entire move. But what I'm looking for is obviously $100 a barrel, which is off the top of the chart there. But I'm just trying to get a position started at the lows. And obviously I just keep, I've been in drawdown obviously since that initial position, but I'm just trying to get this move started. And every time we get a push, we are meeting more sellers. So we're pushing up, meeting more sellers, pushing up, meeting more sellers. We've broken higher than normal, and this is off the back of news. So what I'm hoping for is a pullback today and push, or just a continuation push. I don't mind, either or. But I want to see today close bullish. So on the daily chart, looking for a bullish close again today. Obviously, and that gives us then our 3-bar reversal pattern. And then tomorrow, hopefully, we'll be off. But you know, these 3-bar reversals, yeah, they same as everything. They either work or they don't. That one worked beautifully, bang. That one didn't. That one didn't. Yeah. Will this one? Don't know. But like any pattern or entry criteria, you have to wait and see what happens. But we're at a really, really, really key level here. So this is where we obviously pushed from, and we put that initial market structure break in. That double top is what foiled the move higher. So hopefully this is where we're going to hold the low. And if we're going to go into a range up to Christmas, that's fine. This hopefully will act as the low, $75 to $76 a barrel. But obviously target has been called now and adjusted. Target initially of $100 a barrel was called for Christmas. Goldman Sachs came out yesterday and readjusted that into January. Well, actually, they said quarter 1, which is obviously any time up to March next year, $100 a barrel. But I think I said last week, didn't I? I was very, very unlikely we'd make it there by Christmas. It's too far, too fast. We'd need like multiple ADR hits in a row to get there. So, but yeah, looking good for longs on oil. So nicely positioned long on that one at the moment. Obviously, DAX starting to roll over, NAS starting to roll over, S&P rolling over, FTSE does its own thing. And the Dow, lovely rollover yesterday, again at resistance. Yeah, so speculators who are short, you know, speculators do use stops as well on daily charts. There's a point where you get out. So anybody that, say anybody, banks and institutions that were looking for the next leg bear market that didn't get out of their positions there, I mean, I'm very surprised if they weren't. You'll find a load of limit orders there. So, you know, it's the same thing. The reason support and resistance works is nothing more than crowd mentality seeing a point where we turned from and placing limit orders in the market to trigger at that level. The buyers get to that level and they are overwhelmed by limit orders. That's why you get that. That's all it is. It's buyers and sellers. It's a market like any other market. So it's whether or not we will get enough people jumping on board now to drive the prices down. Obviously, Elon's been helping with that, with the sell-off of Tesla, with the NASDAQ. But whether that continues or not, we will see. Anybody got any other pairs they want to look at this morning? Because there's not really a lot else to look at. It's all ADRs on the Aussies this morning. There we go. So we just got a new low put in, Aussie Swiss. That's what I would be anticipating. So interesting hearing you talk about the charts. 1/3 technicals, 1/3 fundamentals, 1/3 narrative. I don't think there is any one thing you can do. Everybody's looking for the holy grail of indicators or the holy grail of trading in general, and how, you know, this one thing. There is no one thing. This is it's kind of like an organic thing. It's a marketplace. It's driven by human beings. Yeah, don't forget these people sitting in the banks calling the shots are human beings in the same way as we are. They have fear of missing out. They have everything that we have as retail traders, just in a much bigger scale, and that's why things work in the way they do, because it's all driven by human beings. A marketplace is driven by human beings. If you're a fruit seller standing in a market with 2 hours to the close and you've got half your stock left, you need to get rid of that stock and you need to get money in your pocket. So you will start to reduce your prices. This is no different to anything else. And that's why you need to be aware of the fundamentals that drive it, but also the technicals that cause the fundamental moves to start. So if you've got an idea, it's all about idea generation, trading. It doesn't matter what your idea is. How you get in is totally irrelevant. It's how you manage the position. If you take a trade short here on the Aussie Swiss and you put a stop above the high there, brilliant. I'm going to do it. I don't know what to do with this one, actually. Let's move. Let's do it on the price action toolkit so I'm not going crazy. Yeah, so if we go, I'm just going to go 0.25% short. Yeah. I'm doing it because I'm seeing what everyone else is seeing. I'm not doing it for any other reason. But because I'm seeing this, I've hit that button. How many other people have hit that button because I've hit that button? Sorry, let me just get rid of this spammer. Put you in timeout. What should we do with you? Should we? Let's report you for spamming. Unwanted commercial content. Yeah, so it's just that's what it is. It's human. We drive the market. It's driven by algorithms and all sorts of other things. But you know, you've got to be aware of everything. And there's no. This is why I don't think there's any shortcuts in this industry. And that's why I use the brain surgeon analogy quite a lot. You've got to train for many years to become a brain surgeon, to earn the big bucks that brain surgeons earn. Why people think they can buy one indicator and suddenly make £1 million in the most difficult job in the world is beyond me. I was one of those people that thought that way back 14 odd years ago when I started trading. I was like, oh, this looks really easy. When it's going up, you buy it. When it's going down, you sell it. Yeah. But you suddenly realize that it doesn't matter why you press the button. It's all about the risk you take. And there's two ways of doing it. You can either position trade with tiny risk that is insignificant and worry about it later, or you can do scalping, which is basically just playing the odds of risk and reward. But it's all driven by human beings. You know, this trade here, this Aussie Swiss, I was talking about what was going to happen at this level, wasn't I? Here. And it's played out. Not because I'm a genius. That's because That's just what happens. But it only happens 50% of the time. I may well get stopped out, I may not. It doesn't matter, does it? It's irrelevant whether the theory, every theory works. That theory that I said was going to get drawn on the chart is being drawn out. I'm going to add to the position here if it happens, but it's only going to happen if enough people are seeing what I'm seeing. Because if enough people don't see what I see, they're not going to execute the same trade as me, and therefore it's not going to move. Because the only thing driving this is buying and selling, and that's buttons that the institutions, the banks, and the retail traders are pressing. But everybody thinks the Swiss franc is strong at the moment, and everybody thinks the Aussie's weak. They know the Aussie's weak because it's been coming down and the Swiss franc's been going up. So the bias is also on our side. The technicals are on our side. The fundamentals rather on our side. And at the moment, the technicals are on our side. The support resistance is on our side. The fact that limit orders are triggering is on our side. It's just about putting everything on your side. But there's no one thing. There's just not one thing that you can do. It's a combination of years of watching the thing going up and down. I think that's how we all started. Yeah, everybody starts looking for I mean, the hunt for the Holy Grail is a thing because that's, again, it's a human thing. You know, it's just God. Who is this bloke? I thought I just banned you. Hi, I hide you. There we go. Smart AI system. See, this guy's selling the Holy Grail. He doesn't trade. This Gia Bio, whoever he is, he's not a trader. If he was a trader, he'd be trading, wouldn't he? Not flogging some crap. But anyway, that's the other thing is, you know, we know this is full of full of spammers and scammers. So just looking to add to this in a second. I shouldn't be doing this on this account because this account's meant to be running the new EA as a test to see if it can pass, but it's too good to miss this opportunity, so I'm taking it. I just want to get this one passed, really. So what other profession can someone just download the software and start working without any trading or certification? It's why so many traders fail, because they don't know what they're doing. I'm not pretty enough to do YouTube or Insta. Neither am I. That's why I don't show my face. I'm not here as a poster boy. I'm here because I trade. Yeah, I mean, there's you're probably familiar with Trader Tom. A lot of people are, but he uses an analogy of educators and educating. Yeah, if you go onto any broker website, like onto Robo Forex or whatever, they've got this thing where they show you how many people lose. Let's go to the UK one. So they got this down here, this 77.84% of people lose money. If you had any other industry where there was a failure rate of 77%, the industry would be shut down. Let's say, for example, teachers taught and 77% of students failed their exams. Do you think we'd still have the same education system? No. If 77% of doctors failed their exams and came out and actually started jobs as doctors, we'd all be dead. If pilots had a 77% chance of failure when they flew their planes, we'd all be dead. Train drivers, driving tests, everything you do in your life, if you had a 77% failure rate, you'd give up. But trading, no, we just carry on going. Why? Because it's just that mentality, that's that human need to succeed. But even when you know the odds, you still carry on doing it because 20-odd% of people, apparently, that's way higher than it is. Way higher than I know anyway. But, you know, there's 20% of people that actually make it. They obviously got some indicator. Don't they? That just makes you money. But it's not. It doesn't work that way. But, you know, it's like trading education. If we've got such good trading education, if technical analysis works so well, if indicators work so well, why 77% of people fail? Right? We've got this massive list of indicators in there. Right? If these all worked, how can you possibly have a failure rate of 77%? It's nothing to do with the indicators. They all work absolutely fine. They do what they're told. What the reason for the 77% is because you hit the button and you get it wrong. You hit the button, you get it wrong. You hit the button, you get it wrong. Right, drag that one onto the chart. Hit the button, get it right. Hit the button, get it right. Oh, this one works. Wrong, 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 wrong. All right, drag that one onto the chart. That's why there's a 77% failure rate, because people are systematically putting money into this thing, thinking they've got the wrong indicator. They've got the wrong brain. That's why they're failing. Education isn't the problem. It's the person. And that's never going to change. DAX is just going to stick a sell stop under this low quickly here. It's a bit, yeah, that's right. So basically, if the reversal alert gets breached, I'm going to get in short. I'm not going to wait for the reversal alert. I know I should. I'm not going to, because I'm scalping. So I'm going to add to that position. If that starts to work out, if it doesn't work out, it's going to stop me out. But I just wanted to go over to the DAX because that's coming down nicely. So we just made a new low. We're down in this propulsion gap, however, and obviously that's all been bought up. So we'll see where we go from there. The US indices have gone nowhere this morning so far. So we're just kind of sitting around at the minute. David, got the EA running on Aussie CAD, but it has drawn the order block on the previous candle to yours. Yeah, so if you're using it, there's two ways to use it. You can use wicks to the left or not. So check that setting. Wicks to the left. So wicks to the left, we'll use, as it says, wicks to the left. Yeah, so that's the candle, and this is the candle to the left. So this is kind of your conservative mode. Aggressive mode for scalping, I don't have wicks to the left on. In fact, I don't usually have wicks to the left on. Wicks to the left is really for pound odd. It's just hit ADR as well. So Aussie's still very strong, as we can see. It is still holding up at the moment. Yeah, I don't use wicks to the left. It's designed for the theory that when you get this candle painted, the down candle, the run up to it is where the selling starts. This is where the sellers take control. This is where the sellers start. So in that whole area there is contention a lot of the time. And quite often before a reversal alert, you will see a long wicked candle. This is not the case because this is a strong push. But the theory is, yeah, here. You see a long wicked candle before the reversal alert. You see a long wick. Yeah. So it's basically contention and fight going on. And that wick, in theory, is the real break point. Some people kind of think. And this is, no, say some people that talk about, you know, so-called smart money concepts and things like that. But the jury's out for me. I've tested quite substantially on both theories. And like everything, sometimes it's really good to do. Sometimes it doesn't make any difference whatsoever. So there is no right or wrong. It's personal preference, and you trade your own charts. If you want to use it, use it. If you don't want to use it, don't. It doesn't make enough difference to. Sometimes you will get, like Sometimes you won't get triggered on a trade and it will go up and you'll be like, excellent. Sometimes you won't get triggered on a trade and it will fly and you'll get in way later. You'll get in down here and I'll get in here. I'll be out here and you'll be like, I haven't made enough money yet. Sometimes it goes your way, sometimes it doesn't, like everything. We may well just go into an accumulation on this one. Oh, Diamon's just explained it. Yeah, sorry. Yeah. I'm behind on the comments. Is there any chance that your EA discontinued in the future? No? Any chance that your EA will be discontinued in the future? Not planning on it, no. Building a family fund using my strategy upon I need a reassurance. No. Don't quite understand. Oh, you bought it, you've got it. If it was to be removed from the marketplace for any reason, then yeah, I mean, you wouldn't be able to re-download it if you change computers or your software blow up or something, but yeah. No, I'm not planning on removing anything. Unless I get 1,000 negative reviews, then I'll give up. It's the same as everything though, isn't it? I don't know how many indicators I've sold. Quite a lot over the last few years. But you only ever get negative reviews because people only say things about the negatives, and that's because they don't understand what it's doing. You never hear any positives. It's like book reviews. Somebody sells 100,000 copies of a book. It gets 500 reviews, and they're all the people that don't like it. Everybody that loves it went, oh, it's brilliant, and they just pass the book on to someone else. Again, it's us, it's humans. You know, that's what we do. Right or wrong. So we're getting a bit of rejection on the DAX down at these lows. So don't forget the DAX actually really didn't open there. So basically we've got the gap fill complete now on the DAX. So we'll see what happens at the gap fill. We've got nice propulsion gaps, obviously, that we're trading into at the moment. So any move up into there, I'll be looking for the next leg down to challenge the low of yesterday and break yesterday's low. So that's what I'm hoping today. We're going to get another down day. Just to confirm this move is started, and obviously then you've got the reverse alert on the daily, and we'll start this leg down. This is where I think we're going to get stuck. On the way back down again. So we've got a lot of room to the downside on the DAX. Bit of a slow burner this morning, the DAX, isn't it? Just had that nasty move up. And we've spent all morning just undoing that initial push after the open. Just doesn't look right on there, does it? It's just... That's the proper 5-minute opening range. That was my initial entry. There's my stop. That's my add. So we've basically spent, since the open and since I got into that position, we've spent the whole morning so far just undoing the initial pullback. So if you want to add, that's where the add would be. And then obviously adding on yesterday's low, you'll get a flurry of orders coming through there. Again, market theory. Under here, you will have, at this level here, there's a load of buy limit orders sitting there, ready to buy the low. Because that's what markets, that's what indicators, strategies do. There'll be limit orders up at the high. There'll be limit orders sitting at the low because people know that we get reactions there. And there's a kind of, the 80-20 rule. There's a high probability that the first attempt at a breakout will fail. Whether or not it does that and it pushes out below it and then pushes up, which is quite common, that's fine. But people buy that level because they know that there's usually a reaction there. And that's why we get the reaction, because everybody's doing it. So yeah, this morning we bounced at the gap. So it's whether or not the sellers have got enough oomph this morning to carry on with the move. So this propulsion gap is where I would expect to see the next lot of sell orders triggered, if we're going to get them, if they're there. US indices certainly look heavy. They're really struggling at the moment, the US indices. Sorry, I'm going to take US indices. Hello. Why are you putting Aussie Swiss on the chart? So very big rejection at the moment. So again, that's the propulsion gap. Well, that's a propulsion candle, but that was the propulsion gap. But every buyer, again, this is what's happening under the hood. Sellers coming in. This is the buyers going, we've had enough. And the sellers going, nope, we're going to try and push. Nope. Eventually, everybody that's bought and tried to push from there, their stops under there, that's just going to get eaten away. Like that. There you go. See those stops triggering? That's a stop run. And look at when it happened. In the last 10 seconds. Everything happens at the end of the candles. It always does. So all those sellers have just, all those buyers basically have just puked. So we should get another move to the downside from there, hopefully. Aussie dollar Swiss has gone quiet. So either going to work or not. So we are putting in bearish market structure. So we've got high, low, lower high, lower low, lower high. So lower low is going to trigger my second position. And then I'll be looking to get out. Don't know, somewhere down there. What I might do is I'm going to trail that. You put 130 or 13 pip trailer on it, which is basically my stop loss. So there's my stop there, which is 130, 13 pips. So as we push down to 130, I'm just going to start to trail the position, and I'll monitor this one because I'll probably get out. If I can get 0.5% out of it, maybe 1%, I'll just take that off. Oil struggling this morning, no movement. Whoops, on oil after that initial push. So again, we've got the reversal alert. So potentially we might push back down into this area, or even come back down and retest down here. But target is a breakout of the highs today. What's that costing commission? 279. Right. I don't think I've got anything else to cover this morning. I've just done some more back testing on the EA, which is just finished. Excellent. Let me just copy that Sorted by profit. What did we get to? 343 grand with a 16% drawdown. I'll take that. Over 4 years, that is. So I've just, I'm testing the hell out of this EA, like proper smashing it to pieces testing. So I've done an out of sample test now on 4 years. Because I wanted to find the optimal setting over a 4-year period with drawdown as well. Just to see, you know, what we can get basically. But I think minimum drawdown on this went down to 7% or something. Yeah, 7.16 with a 72k return, which isn't a lot, is it? 72k over 4 years. 18 grand a year, but it never touched more than 10 grand. So there's a guaranteed 18, not guaranteed, nothing's guaranteed, but there's an 18 grand a year return off of a prop account there with a 10 grand drawdown. But if you want to go aggressive and realize that, yeah, you do have to blow accounts to make money, you can make 340 grand. 343 divided by 4, it's 85 grand a year, but you're probably going to blow 2 or 3 accounts in that. So it's whether or not you can take that money out. You probably might get half of it. Don't know. But that's all finished testing now, so I just need to copy that into the spreadsheet. So I now need to do the Dow. PM money risk 4 years. I'm just going to run that now on the Dow. Whoops. Same test. So yeah, I'm basically just super testing this. I was wondering how many of those actually made it. So we did 8,000 simulations there. Again. Whoops, one sec. Why is that? Max 8,000. That is it. Max. NAS. So we ran 8,000 simulations there, and we got 7,696. So just over 300 permutations didn't pass. So there's 300 possible combinations of settings there that would not have made you money, but 7,700 of them would have, ranging from 80 grand to 330 grand. So basically stick the EA on, and I'd probably bet my mortgage you wouldn't lose money. I'm not going to bet my mortgage. Come on, DAX. Let's get a move on. Morning, Tony. Do you pay any attention to the RSI when scalping? No. Got nothing to do with oversold is first of all, oversold is not the right terminology. You can't oversell. You can't have something that's oversold that's not tangible. Oversold is only a stock trading term. Something is overbought or oversold, it's to do with the stock overvalued or undervalued. So that's why I kind of try and use the term extended, because I suppose in this case, it is technically right because it's a stock market. But on a normal thing like that, obviously RSI's got nothing to do with no tangible product, so you can't buy or sell tangible because there's no tangible product. Anyway, forget that bit. No, I don't, because the initial opening balance hasn't got anything to do with yesterday. So the opening range, which is not right on this chart, it's right on the DAX. It's right. Let me do it this one. So this opening range here, that initial cash transaction that goes on has got absolutely nothing to do with what happened yesterday. So if the DAX yesterday was extended on the 15, and again, you know, you say it was extended on the 15-minute time frame. I'm not trading 15-minute, I'm trading M5. So when that initial opening candle came in here, the RSI was above the 60 level. Yeah. The only reason, this was extended this morning was because it gapped. When it closed yesterday, the RSI was sitting at 40. Yeah. So what happens here has got nothing to do with yesterday. Every day with indices, with scalping in general, not just with indices, but with scalping in general, what happened yesterday is totally irrelevant. Yeah. What your moving average says is got nothing to do with anything. Yeah. What happened yesterday is yesterday. Today is today. If you lost 100 grand yesterday scalping, what's that got to do with today? Nothing. If you made 100 grand yesterday, what's that got to do with today? Nothing. What happens here on this opening range, and whether or not I make money out of this opening range breakout short I've taken, has got nothing to do with anything but where they're going to take price today. I couldn't give a monkey's what happened yesterday. It doesn't make any difference. It can give me a bias, which again can be dangerous. So I could be thinking, I want to be short today. Why? Because I was short yesterday. Yeah. Do you think everybody that was short here and here because it was short on those 3 days made money? No, they all lost. Because this day and this day have got nothing to do with the fact that these were 3 down days. Yeah, there was a down day there. Did everyone go short that day, the next day? If they did, they lost. Nothing to do with it. Where this is going today has got nothing to do with anything but what is going to happen today with the order executions the institutions have got to make and news events that are going to happen, which are going to change the fundamental bias of this index. If Lagarde comes out today and says, we've decided we're going to raise interest rates to 1.5% in December, the DAX will do a 400% down day. Yeah. It's got nothing to do with whether or not it was down yesterday. So the relative strength, again, RSI works very, very well when you have strong moves that need a profit take. If the strong move was caused by a fundamental shift, RSI doesn't work, which is why you need to be aware of fundamentals. And what you're reading is on one time frame will again not have any relevance on another time frame. So, you know, but you can use, I mean, if you want to use it, use it. It doesn't, but this theory, this strategy is a momentum-based strategy. So what the momentum before this event was doesn't really have an effect, because what we're looking for is for the market. We just basically, it's a breakout strategy. We're looking for the market to pick a direction. We're only going to make money if we get a trend day. If we get a rotation day, we're going to lose. Which is why it's good to couple it with something like a mean reversion strategy that will take advantage of rotation days. So when your trend-based strategy is failing, your mean reversion strategy is taking over. And some days with those trend days, you can make money on both. But you know, yesterday it's a price action strategy. Price action's got nothing to do with anything else but price action. Yeah, if there's a whacking great down candle like that goes in the market doesn't care what a squiggly line says. The reason that has happened is because there is a bank or institution executing a vast amount of sell orders in German stocks. And again, think of it, right, the SAP is the top stock in the German stock index. We've also got BMW in there, right? If S&P, if let's say this is extended to the downside, right? If S&P release their earnings and their earnings is drastically off what they were expecting and it's a massive miss and they've made a lot less money than they thought they were going to do you think the market would worry about whether or not it's oversold or that line is down below that level? People are going to want to dump S&P stock. This thing's coming down. Yeah. Yesterday, S&P were doing a lot better because they had no announcement of their earnings. Today, we have an announcement of their earnings. NASDAQ, prime example. NASDAQ's doing brilliantly, absolutely fantastically. Elon Musk sells 19.5 million shares in Tesla. Boom. Has that got anything to do with that? Or that? Or that? No. It's got to do with one bloke. One thing happening. So on that day yesterday, on the NASDAQ, or whenever it was, doesn't matter. But on that particular day, you follow what Price is telling you to do. Price was telling you that it was going down, so you go down. Doesn't matter what it did the day before. That was actually the day after Thanksgiving, so there's a lot of obviously executions going on. Market order executions, not executions, shooting people. But yeah, so long answer to a short question. No, I don't. But it doesn't mean you shouldn't. If you want to, everybody's got to have a reason for getting in. Let me just put DAX on here a minute. Actually, no, I'm just going to look at this. I've just realised I've got no trailers running, have I? Because the EA's not running, so I need to stick trailers on all of this manually. Let me just cancel that order off. Oh, God. Just putting 30-point trailers on everything, which is what the EA should be doing. So that's all locked in now, all that profit. Everything's trailing. Let's see how far we're going. So again, you're going to get limit order trigger here. And that will either be the start of a big correction or it will be dead cat bounce, and we will carry on our merry way. So see if those limit orders trigger and how many are there. And we quite possibly will get a pop. So we'll get a very fast flush through there and then push back up. Either that or they will just trigger all the limits and we won't actually get to take out those stops. Either way, we should get a reaction of some shape or form at that level. Aussie to Swiss well and truly stuck. Okay, chomping through the limits. That's, I would say, probably going to continue to flush today, which is good. So there's your flush out the low. Not enough buyers there. And again, you know, the reason you'll find more sell limits at the highs is because yesterday was a down day. So psychologically, everybody's thinking we had a down day. If we can come back up and retest yesterday's high, we're likely to sell. Whereas there's less people wanting to buy in front of a steam train. So you get less orders trigger at lows. But there's the reaction. So buyers stepping in with all the limit orders at the lows. We'll see if we get a pullback from here. If we do, I'll be stopped out on this. And anyway, that one is it. What's happening with the rest of these? Aussie CAD still hovering around up there. Aussie Swiss still hovering. Aussie Yen, that's come down nicely off of ADR. Again, see there, you didn't get the reversal alert on that because it's, you know, this was the last down candle before that massive final push. So the entry for you on that would have been price action. Price action entry on there would have been this bear candle is an inside bar. So I'd be looking at a break either of that candle low or that candle low to enter. And there's your M pattern reversal. Add. This would probably be a good TP point down here. But this all happens before the reversal alert, obviously, because, you know, that's the last down candle. So that's the last batch of sellers you had, then the buyers took over. So when we break this low, we will then have that kind of price action starting market structure going down from there. Aussie US, it's come off of 125 ADR. CAD Swiss off of 100 ADR. Swiss yen flying down. Good strong yen. Probably weak Swiss actually. Euro odd, it's come off of 125. And New Zealand's just hit. There's still so much price action going on at the moment. Euro New Zealand, that's just faltering. 100 pound odd, it's just hit. And pound New Zealand has just hit. Pound Swiss, again, 100 to 125 started the reaction there. There's the retest. So down to there. New Zealand dollar Swiss still pushing. So New Zealand dollar looks like it's still fairly strong. Yen's looks like yen's strengthening up as well. Yeah, nice strong yen again this morning. So this yen looks like we really are getting this strength, which is great to see because it means we can have a bias on the yen now, hopefully. So we've made that low, broken that low. So I think the yen, we're going to start to see some real strength coming through on this yen now, which is very good. Let's start trading it again. Kind of want to bank this. I'm going to let it run. This is what the EA is doing. I'm going to let the EA just do its thing. Although it's not the EA, it's me doing it this time manually. But this is what the EA would have been doing if it had triggered and they didn't have stupid candles. Got to look that up as well. They haven't got a Telegram group, have they, my Forex funds? Or have they? I don't think they have. See if there's anything on their blog or anything. Not very good social media, my Forex fans. Xavier. Shouldn't laugh. The haircut. Right, I'm going to leave it there, I think, this morning. So this DAX, basically, I'm just going to get stopped out on it on the next pullback. If it's going to continue to go now, it's taken out the lows. So be it. Obviously, there's a long way to drop. So I've got this running on the on my main account as well as a position trade on the DAX. Wrong one. So I've got positions built on this. I'm in profit on it at the moment, but I'm trying to let this run, get obviously the next leg started. So hopefully that's going to continue to come down. But we'll see. So from where we are right now, we've got a major level coming up at 143.18. So if we don't get the reaction here and a start of a pullback, and we do manage to flush through, we haven't got far to go to the next support. So I'll just let the trailers take me out on that trade and see how far we get. But if we do get a really nice, just strong move, get any news or anything down to ADR, that'd be a nice day today. And the Aussie Swiss, I'm just going to let that run. So it's either going to break and trigger the second position, and then I'll get out somewhere down there, or we'll just stop out on that. But Aussie looks pretty strong still this morning. It's holding up pretty well, apart from against the yen, which is obviously pushing at the moment. New Zealand dollar is stronger as well than the Aussie by the looks of things. So this is really weak Swiss franc still, isn't it? Yeah. Yeah, we've been scuppered by the Swiss franc here at the moment on this one. We need some Swissy strength. That will pop when that comes in, but we'll see. Right, guys, I will leave it there. Oil's not going anywhere either. So I'll be back tomorrow morning, same time. And we'll see where we are tomorrow. But news-wise today, we got GDP for the CAD at 130. So be aware of that if you've got any CAD positions on. We've got the pound, we've got Bailey speaking. I get the feeling, as I said, we might get a leak there. Because obviously it's his first time in front of the Lords since the new fiscal policy went in. So he'll be talking, I think, about future monetary policy. So we might find out some information today about what they're going to do with interest rates moving forward. So be aware of your pound. We might find that we get a spike or a drop in the pound. And then we've got consumer confidence this afternoon for the US, half an hour after market open. And again, that will probably drive it this afternoon. So hopefully we get decent figures coming in there and we get another bull day on the US. If we get that, we're going to get another down day on the indices, which means that obviously we will continue to flush to the downside, which is good news. So we'll see, but it's not in our control. So we'll just see what happens later. All right, anything you need, I'll be in the Telegram group. I'm not taking any new position trades at the moment. I'm just managing what I've got. New Zealand CAD, Aussie New Zealand, the DAX, oil, and that's it. So I'm just still waiting for those all to move. Aussie New Zealand, I'm totally stuck sideways at the minute. Have been for the last 4 days, not going anywhere. New Zealand dollar CAD, pretty much the same thing. I'm stuck up here. It's not going anywhere. So just waiting for everything to move, really. But fingers crossed, everything's going in the right direction now. So we should hopefully get some follow through on this momentum and be able to get out of those. But not looking for any new positions at the moment. Nothing's extended on the 4-hour RSI. There's nothing really catching my eye at the moment. So scalping. All right. So have a good day. Hopefully it's profitable. I will let you know if I close anything out or add anything. The only thing I'm thinking of adding just before I go is oil. So if oil pushes back down again this morning, if we get back down anywhere into this propulsion gap today, I will be taking another oil long. Apart from that, there's nothing else I'm going to be doing really. So that's the only thing that I'm planning today is another oil. But I'm hoping we get that reversal out on the 4-hour and we're off. We'll see. All right, so have a good one. I'll be back tomorrow morning, same time, 7:50. If you need anything, let me know. We'll go through all the charts tomorrow. Have a good look through everything after the news today. Yeah, get ready for non-farm payroll on Friday. Okay, have a good one and see you in the Telegram group.